Right. So it'd probably help if I hit the record button. Anyway. So what we're looking at here, yes, I have bought. Well, I had limit orders pending here, and I'm actually talking as the market comes in and hits my orders. So now I'm live on the trade. I continue talking about the trade. Haven't even hit the record button there. So just to quickly recap, what's happening? So again, this is the dollar yen on the 15-minute time frame. And what we're looking at, if we're looking at structure right up here, price action coming all the way up into. Hi everyone, it's Philip C here. That is who you're watching right now. It is Tuesday, and I wanted to put this little video. I don't know how to do little videos. I put this video together for you to showcase a live trend continuation trade that I did. I was currently involved in a couple of other ones, and I wanted to say thank you so much for your continued support. And quite a few of you haven't taken up the offer as of yet. What am I talking about? So I put a lot of effort into designing a platform for you that you can join up for free. Links in the description below. Not only will I teach you the trend continuation trade, but there's also other training in there. And one of the biggest ones that I've put together is the Foundation series. And that's going to show you the reality of day trading, what this actually looks like. So not all the bullshit stuff that you see online. What is the reality of day trading? What does that look like? So if you sign up for the platform below, you click on the Foundation series and you get immediate access to that video. And it just shows you behind the scene of what it really takes. And also, while you're there, you can still learn the trend continuation trade and also price action, structure, the language of the markets. All right, back to the video. This structure level and then immediately rolling over right here, hitting double targets. And this was I'll draw it in for you right here. So you can see the W formation at play, which is a Gartley pattern. That is what this is. Price action came up into a 127 Fibonacci extension. So that is what completes the Gartley pattern. So from this low to this high, Fibonacci extension, swing low to swing high, back down in. As you can see, price action did come all the way up into that 127 right there, completing the Gartley pattern. So this, a valid pattern, not anymore because it's already complete. The move is already done. And we hit double targets on this. Where is double targets for a Gartley? Let's take a quick look before we look at the trade that I got involved with. So Fibonacci retracement, this swing low, all the way up into swing high. So as price action hits the 127 right here, which is the potential reversal zone right there, right up at structure, then we roll over. Hit 127, roll over into the 382, which is target 1, and then right down into 618 for target 2. So that would have been about a 25 pip trade if you were to trade that. What I'm looking at here is a trend continuation trade. So if I get rid of this, actually pattern trade on a higher time frame too, if we get price action right up around these levels, this level at 139. There is a potential W formation that I'm looking at as well from this high to this low. So this impulse leg, right? Swing high all the way down into swing low. Now we do hit the 382 here. So that's on the bat pattern, W formation right there. Okay. And if we get, hold on a second. It's not the 382 anymore. We have a new low below these lows as we speak. So now it's a 50, right? This is what we're looking at now. Because you've got to make sure you get it right. So we've got impulse leg right here. And then instead of here, what we're looking at is here. So 50% B point, then we come all the way down right here for a C point, then a potential CD right at the 886. So your potential bat pattern would look something like this at the 886 right there. So this would be the new potential reversal zone, the PRZ, or what you would also call a kill zone. What does it mean if price action comes up into this level? Most likely we will see a reversal out of the market. And with pattern trades, what you're trying to do, what was that? Okay. With pattern trades, what you're trying to do is capture a little move out of the market, a little reversal out of the markets with patterns. All right, so what are we looking at? Dollar yen, 15-minute time frame. I'm looking at these lows right here. This right here is where I'm looking. Well, it's actually right up here. This is where I'm looking for a potential buy opportunity. So this is another trend continuation trade on the 15-minute time frame on the dollar yen. And right now, I just want to walk through it with you. Again, what are we looking at here? We got stops at 25 pips, and then we got targets at 27, 28 pips. So just over a 1-to-1 on this trade. This right there is my starting point, SP. This low to this high, right there. We come all the way back down, okay? We actually put in a double bottom right here, like this, okay? Then price action puts in one of these. We get a move to the upside. Let's just zoom in a little bit. We get a move towards the upside here. What does that give us? As price action moves towards the upside, we have a higher high, higher close. Why? Because this candle closed above this high right here. Oops. And that would give us a new structure high. We have a starting point. We have an initial move up. Remember the training. That's what we're going through right now. We have a starting point, initial move up, then we come all the way back down. We put in a little move like this. Then we get another move towards the upside, closing above these highs, giving us a new structure high. So after a new structure high, I'm waiting for a pullback. Where am I waiting for a pullback? All the way back down into where we're resting at right now. This structure level right here, okay? When price action tests this level, you can see every time we do, we get some kind of reaction out of the markets. So this indicates to me that it's a good level that I want to be involved in the markets. Now, this could come all the way down and create new lows, closing below these lows looking left. If that's true, if price action wants to do that, if the markets want to do that, then I need to get out of the position. Why? because my stop placement is there to say that, hey, I'm wrong on this move. Because remember, I'm not 100% accurate on these things. Shocker. I'm only 48 to 53% accurate on these things, right? I'm just right in there about 50, 55. I just hang around on that win percentage with trend continuation trades. But the beautiful thing about the trend continuation trades, hey, if you're only right 50% of the time, and you have more than a 1-to-1 risk to reward, and you're looking for 2-to-1 or almost 3-to-1 on target 2s, then over time, it stands to reason that if you trade this every single day with discipline, every single day with discipline underlined, that's the key, then I'm going to have consistent results. What are those results going to consist of? The results that I've tested. So if I've tested this and I'm 50% accurate, and over time I gain more than I lose, and my risk to reward is over 1-to-1, and I have a really good risk to reward to target 2, then what I'm trading mathematically says I have a winning system. And that's what you need in trading. You need an edge. You need to know that what you're trading actually works. And one of the best ways to do that is to take this strategy or anything that you want to trade and go and test it, so you know that it works for you. And then every single day you come into the charts, you come into the markets, you go to the charts and you trade that the same way every single day. Sounds simple, right? Because trading doesn't have to be overcomplicated. It's us. We love to overcomplicate things. But that's all trading is, guys. It's finding a strategy that you like, testing said strategy, knowing that this produces a positive return over time, and then to trade that every single day with discipline. That's the easy part. The hard part is actually putting in the work. The hard part is putting in all the testing. That's the difficult part, because it's time consuming, and no one wants to put in that effort. But if you just do that, take a strategy and test it, and know what that system produces, and then come into the charts and trade that every single day, you'll do phenomenally well. I've done it. Other people I've helped have done it. My mentors have done it. People at hedge funds and prop firms have done it. So why can't you do it? And I believe in you. I know that if you're watching me right now, you want to do this. But you have to get serious about it. And know that what you were trading actually works. And that requires putting in the work. So what we're going to do is, I'm rambling on as I do. And what we'll do now is pause this, or actually it's 10 to 12 midnight my time. So I might not be able to hang around with this one. Where are my extended targets? Fibonacci's extensions. Actually needs to be right about here, the 127. Okay, Yeah, so potential targets are 26 pips for target 1. And then let's say 40 pips right there. 40 pips for target 2. My entries are in the right place. Okay. Price action came down into the level that I was looking at. My stops are in the right place because if price action moves down, creating new lows, I want to get out of the markets because we most likely get a pullback and then headed towards the downside, right? So I want to play the probabilities on this. Stops are in the right place. Entered at the right place. Need to get out of the markets on my targets. So if I'm right on this trade, where am I getting out? Target 1 at a retest of the highs right up here. Okay. And then target 2s. Target 2s might get a little bit more out of this move right here at the 127. And I'll tell you what, if we get a move right up here, if I'm awake, might be able to get a short opportunity with that W formation as well. Okay, so that's my trend continuation trade. What I'll do is pause this and we'll come back to it and see how this plays out. Winner or loser, this is a good video about taking a strategy, testing that strategy, and trading that with discipline. Simple, easy to do. It's not overcomplicated. Anyone can do this. So why can't you? And I believe in you. I just need you to believe in you too. We'll pause this and I'll be back soon. All right, I'm back. So as you can see, we are getting closer and closer and closer down to our stops. Now, that means that the other trend continuation trades I'm currently involved in might hit targets. So euro dollar on a 1 hour time frame. I've just been got involved a while back here. And price action just continues to bounce and move sideways. I haven't moved my stops. I haven't moved my targets or anything. It's important that once I put the trade on, that was it. The decision was made. My analysis was correct. I got involved in the trade. I knew where I'm getting involved. I knew where I'm getting in. I know where I'm getting out if I'm right. And I know where I'm getting out if I'm wrong. Okay. That is important before you enter any trade. Those are the things that you need to know before you get involved in any position, right? So euro dollar on a 1 hour time frame, currently long here, trend continuation trade. Pound dollar, this is on a 4 hour time frame. Pound dollar, the same thing. So we came up, we came back down, getting involved in this buy zone right here. Looking left at structure. Okay, we've got structure here, 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 and here. Again, that's where price action is most likely to react to. And as you can see, as price action moves 3/4 of the way to target here, for those of you who have been following along with me for a while, you know that if price action comes 3/4 of the way to target, my stops get rolled to break even. So I have a script already that I'm running, and when it does do that, then the stop orders are already rolled to break even right there. And I want to protect my capital that way, because that's what professional traders do. We're not so concerned about the profit as much as we are about protecting capital. That's how you can differentiate a really good trader, someone who's a professional, to someone who's just average. You've got one of the guys saying it's profit, 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 which is a huge red flag. And then you've got the other traders who are talking about limiting risk exposure, managing their risk, managing their capital, managing their money. So those are the two big key differences, right, when it comes to trading. So speaking of which, I am wrong on this trade right here. Price action did come all the way down into my buy zone. I was looking at a long opportunity here in the direction towards the upside. My stop placement was at the right place. So I want to get out here because I'm wrong on this move. And then we might see price action come up all the way back up into this level and then continue towards the downside. We do have a lower low, lower close right here. Looking left, immediate bounce towards the upside there. So that may play out in that way. So I want to get out right down here, not all the way down here, right? So if we're going to move below these lows, I need to get out. So that is why I put my stops there. Yes. Nothing on pound yen. Yes, so pound dollar. See if we can get a little bit more of a move towards the upside. 15 more pips towards the upside is what we need. And that would be really good. Looking at about 100 pips of targets. 100 pips for that move right there. And then euro dollar would be the same, almost 3/4 of the way, so we can roll stops, and that would be another 64 pips on this move. That would be good. But yeah, back to dollar yen. Everyone wants to see a winning trade. Not all of them play out in that way. You get some wins and you get some losses. So on this particular trade, again, I'm about 50%. But when I win more than I lose. And the main point and key takeaway from this is if you have a trade strategy like that, and you come into the markets and trade that every single day with discipline, you will maintain your edge. And having an edge is key in trading. You do that every single day. You be consistent trading your edge every single day. Then over time, throughout the year, you will be a winning trader. What does that mean? A consistent, profitable trader. But that is about me for now. So it's midnight over on my side of the world, actually. I need to power down here. So yeah, loss right there. See what happens with pound dollar and also with euro dollar. 2 trend continuation trades there. If you do want to learn this, hit the link in the description below. I have put together a platform for you to sign up with, create a free account, and you can go through the training there. There's also training on price action. There's also training on structure. Everything that I trade live in front of you, you can go check that out. All right. But until next time, oh, and don't forget to subscribe and like this video. Please help me with the algorithm and reaching as many people as possible. Until next time, be safe, enjoy life, and I'll talk to you soon.